Welcome back, my friends. The news today is that Berkshire Hathaway dumped Warren Buffett's Berkshire Hathaway sold nearly half its stake in Apple. Warren Buffett's Berkshire Hathaway slashed its stake in tech giant Apple by nearly 50%, according to Berkshire's second quarter earnings report released on Saturday. Berkshire Hathaway disclosed its holdings in Apple were valued at $84.2 billion at the end of the quarter, dropping from 790 million shares to 400 million shares. The sharp sell-off is notable for Buffett, who is known for holding onto stocks for long periods of time. Berkshire Hathaway has previously downsized its stake Apple, which has a market cap over $3.3 trillion. In the final 3 months of 2023, Berkshire Hathaway sold off 10 million shares of Apple stock, representing about 1% of its holdings in the company. In the first quarter of 2024, Berkshire cuts its stake in Apple by 13%. Meanwhile, the Omaha, Nebraska-based conglomerate reported a record cash pile of nearly $277 billion for the second quarter. Berkshire Hathaway reported about $189 billion in cash and equivalents in the first quarter. But before we get into all of that, I would like to thank everyone who views my videos. If you would like to support the channel, please see the link to buy me a coffee in the video description below. And please hit the like button and leave me a comment below. I would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Warren Buffett's Berkshire Hathaway dumped nearly half of its gigantic Apple stake last quarter in a surprising move for the famously long-term focused investor. The Omaha-based conglomerate disclosed in its earnings filing that its holding in the iPhone maker was valued at $84.2 billion at the end of the second quarter, suggesting that the Oracle of Omaha offloaded a little more than 49% of the tech stake. Even after the selling Apple remains the largest stock stake by far for Berkshire. The Apple share sale comes amid a broader pattern of selling by Buffett in the second quarter, as Berkshire unloaded more than $75 billion in equities in the period, raising the conglomerate's cash fortress to a record $277 billion. Buffett had trimmed the Apple stake by 13% in the first quarter, and hinted at the Berkshire annual meeting in May that it was for tax reasons. Buffett noted that selling a little Apple this year would benefit Berkshire shareholders in the long run if the tax on capital gains is raised down the road by a U.S. government wanting to plug a climbing fiscal deficit. But the magnitude of this selling suggests it could be more than just a tax-saving move. After declining in the first quarter on concerns, it was falling behind on artificial intelligence innovation. Apple shares took off in the second quarter, gaining 23% to a new record as it gave more detail to investors about its future in artificial intelligence. It won't be clear exactly why Buffett is selling down the holding Berkshire first bought more than 8 years ago, whether company reasons, market valuation, or because of portfolio management concerns. Buffett typically doesn't want a single holding to grow too large. Berkshire's Apple holding was once so big that it took up half of its equity portfolio. Berkshire Hathaway sold off $75.5 billion in stock in the second quarter. Along with Apple, Berkshire cut its stake in its second largest position, Bank of America, to $41.1 billion. The earnings report showed that approximately 72% of Berkshire's aggregate fair value is concentrated in 5 companies. American Express, $35.1 billion, Apple, $84.2 billion, Bank of America, $41.1 billion, Coca-Cola, $25.5 billion, and Chevron, $18.6 billion. For years, Warren Buffett, the world's most successful and widely watched investor, mostly stayed away from tech companies. The notoriously methodical investor would explain that it was because he only invests in businesses he understands, and tech wasn't really his thing. Then in 2016, Buffett's company, Berkshire Hathaway, started investing in Apple when it purchased $1 billion worth of the company's shares. By 2017, that amount would grow to over $28 billion. All told, Berkshire has spent $40 billion on its stake in Apple. Since then, the company's stock price has increased by roughly 800%. On Saturday, in a filing with the SEC, Buffett revealed that he had dumped almost half of his Apple stock, netting $76 billion. Earlier this year, the company sold a smaller number of shares, bringing the total sold this year to more than 500 million shares, representing 56% of Berkshire's total stake in Apple. On the surface, it's kind of remarkable that, despite waiting so long to buy into the tech company, Buffett's timing has paid off so well. Apple has made him a lot of money. That, it turns out, is a pretty important piece of understanding what's happening. Right now, Apple is again the most valuable company in the world. It's also the most valuable it has ever been, with a total market cap of $3.3 trillion, making it the largest holding for Berkshire Hathaway, even after the sale. That timing thing is pretty important because even though Buffett didn't specifically say why he's unloading Apple's stock, he has indicated in the past that he plans to hold on to the company's shares. Unless something really extraordinary happens, it would seem reasonable to ask why Buffett decided to make such a large sale now. Well, is there a better time to sell the stock than when it's at its all-time high? Even if you think the stock might go higher, sometimes it just makes sense to let go. To understand why, it's worth considering something Buffett mentioned at Berkshire Hathaway's most recent annual meeting about the company's growing cash pile. "We'd love to spend it," Buffett said, "but we won't spend it unless we think we're doing something that has very little risk and can make us a lot of money." Those last 6 words, "make us a lot of money," turn out to be pretty important because, as much as Buffett likes Apple as a company and an investment, his ultimate job is to figure out how to make his shareholders as much money as possible. It seems reasonable to ask, with Apple at all-time highs, where the $76 billion he just pulled out of the stock will be most likely to get a return. Unless he thinks Apple is going to continue on the same trajectory, which just seems less likely considering its massive scale, it makes sense to think of other ways to deploy that capital. To be clear, I don't think Buffett is worried about Apple. In fact, in the past he has said that he would own the entire company if he could. Buffett has explained that the reason he thinks Apple is so great is that it's an incredibly well-run company and has praised Tim Cook's leadership. Buffett has previously indicated that he has sold a little bit of Apple's shares to potentially avoid higher tax rates in the future. Put another way, Buffett is taking a certain profit now, with known variables like a lower tax rate instead of gambling on uncertainty. It seems likely that Buffett is selling Apple as a hedge against uncertainty, not necessarily in the company but in the broader world. Honestly, I'm less interested in Buffett selling shares of Apple as an investment lesson. I don't even own shares of individual companies, so while I respect Buffett's investment prowess, I'm far more interested in this move as a leadership principle. There's a really simple but important lesson here. You should always be willing to let go of something if it's the right thing for your business. Even if you think that thing is really great, there will no doubt come a time when you have to decide whether to keep moving in the same direction or consider something new. Neither of those options should be considered lightly. But the point is that sometimes the best thing you can do for your company is to let go. Sometimes your job means letting go of something you think of highly so that you can make a lot of money. But what do you think? Please hit the like button and leave us a comment below. We would love to hear from you. Please subscribe and hit the bell icon so that you are notified of upcoming videos when they are released. Please share this video on social media. And before we end, a word from the sponsor of this video. Today's sponsor is ProWorldNet.com. ProWorldNet.com is a job website specifically dedicated to licensed professions, doctors, including any type of specialty, nurses, and that includes all grades of nurses, lawyers, regardless of area of legal focus, teachers and professors, from kindergarten through graduate school, as well as any kind of job that requires a government license or certification. And ProWorldNet.com also includes short-term gig-type jobs as well. So be sure to check out ProWorldNet.com if you are looking for a job or an employee. Thank you for watching.